Bloomberg Audio Studios.
Podcasts, radio, news.
Single best idea. What a show today with all the economic data, CPI, retail sales, and that, and our guest rally. Great to have Dana Telsey with us, the Telsey Advisor Group. Way too short a visit with her, but important on retail sales that were a little soggy, particularly the control group. She made very clear that there's a partition in America. Luxury is really doing quite well. She's optimistic about a redo in China of demand. But away from that, there was some sogginess to retail sales. What a joy to have Gina Martin-Adams with her courage to be in the market, Bloomberg Intelligence. And just before her, Ed Yardeni, truly iconic. Ed Yardeni reaffirming SPX 5400 and the idea that corporations are moving forward. We certainly saw that within the equity markets as well. There was a little bit of Fed analysis. Paul Donovan, outstanding. If you're on LinkedIn, we send this out, Single Best Idea, out to Twitter and LinkedIn every day. And if you're on LinkedIn, look up Paul Donovan of UBS. He does a great, great job bringing the UBS knowledge to LinkedIn. Mr. Donovan was fired up today about a Fed that is not so much wrong, but much more behind. Here is Donovan of UBS.
I would be looking to cut rates already, because if you look at the market-based prices, the prices that Fed policy actually influences, that's in disinflation territory. You look at durable goods prices, that's in outright deflation territory. Does Powell seriously think that keeping interest rates higher for longer is going to bring down owners' equivalent rent? Because newsflash, it isn't. It doesn't have any impact on owners' equivalent rent, certainly not to the downside. It might actually raise it. And that's where we're finding this stickiness in inflation. It's in the made-up prices, the fantasy prices. Now, we saw obviously a big bond market reaction to the last CPI print, the March number, which came in stronger than expected. Why did it come in stronger than expected? Because of rents in Detroit. We can't base an entire country's monetary policy on whether or not the cost of a condominium in Michigan is going up or not.
And Paul Donovan, just brilliant there, and really, always intense, but fired up there on what we need to see June 12th at the next Fed meeting. We looked at equities today, and of course, we did look at bonds. Matt Michigan of John Hancock, thank you for attendance right around the 8:30 report. Ira Jersey of Bloomberg Intelligence was just brilliant about the focus on short paper. He will publish for Bloomberg Intelligence. I think you'll see that as we tape this within an hour. That'll be very, very important to look at in this readjustment. Equities higher. The real yield coming in, it's been bracketed, I'm going to say 210 to 220, 210 to 218, and the 10-year real yield breaking down beneath 2.10%. off the set of economic data today. Before that, we talked to Meghan Graper. She's outstanding at Barclays. We talked to her about corporate issuance. We talked to her about debt markets.
I think you've got to think about taking chips off the table because we don't know what we don't know. So the second half of the year, I think, presents the potential for any number of landmines to start rearing their head. And so while you have these optimal demand technicals in place, even thinking about your 2025 funding needs and pulling those forward. Acceleration is now the defining force behind the new issue markets and investment grade. And so we're seeing volumes up 40%, but it's not precluding borrowers from achieving negative new issue concessions versus their existing secondaries. And you're seeing oversubscriptions that are pretty eye-popping, particularly in the long end of the curve. So the combination of those factors means, double down, continue to pull funding forward. And I think, avoid the noise that might start to creep in and the rate volatility we're likely to experience as we move into the second half of the year.
Some people say, what do we follow here? Paul's very good about following the CD race. Somebody tweeted in live chat on YouTube, they tweeted in they had a 5.35% 6-month CD, which sounds like from another era, another age, as a Pleistocene or the Mesocene. I can't remember which era. But the answer is, in one of the great themes today on the show, across equities, bonds, currencies, commodities, is we're back to normal in the bond market, at least in pricing. I don't know if our brains are back to normal. And that'll certainly be one of our themes into the caution that Meghan Graper talks about into the end of 2024. 24. Just an exceptional day for us on linking in this economics into the markets as we tape this record high in the Standard & Poor's 500. We do a major shout out to the bulls, the people that said be in this market. There are too many to name. There's been a good set of people that have said just participate. I think Brian Belsky at BMO Capital Markets is one. Ben Laidler way out front with eToro, and before that with HSBC. We're on Apple CarPlay. We're on Android Play. Hugely popular and free. The Bloomberg business app will get you over to Apple CarPlay. That builds out. They continue to enhance Apple CarPlay when they're not trying to figure out what to do with the goggles. YouTube is just building. We are thrilled with the reach, the global reach every day of YouTube. We really just can't believe the ease of use there and the building that we're seeing in YouTube. What do? You search Bloomberg Podcasts and critically subscribe to Bloomberg Podcasts. That's the easy path. Subscribe to Bloomberg Podcasts, and you'll find us. You'll find the replay, 2 hours, 56 minutes, and also this podcast. Look for us on Apple. We say good morning. This is Single Best Idea.